Good morning, traders. Welcome to the Traders Lab. I am your host, Tom B. Thanks for visiting today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time, and you're all invited to visit the Bookmap Discord Trader Lab community. It is a serious community, and it's based on integrating Bookmap order flow tools with auction market theory using the volume profile as a chassis in the intraday developing time frame. It's based on structured trades. And also there is a library of webinars plus the Trader Lab community. It's available to all of you, whether you are a user of Bookmap or not. And there's a link in the bottom of YouTube if you're inclined. And there is no cost. I kind of think that's pretty good. But we have got a lot to talk about today. I'm going to review the condition of yesterday. If you've been following this stream, yesterday we talked about the condition of the market and that we're looking for a situation that repeats over and over again. And I'll get into that. Grab your pen and paper. We have a lot to talk about today. And this is the kind of day and the stream and what we do here in Trader Lab is the kind of thing I think for developing traders who are interested in the business of trading, understanding how the market works, why it does what it does, and how at times we can get in alignment with it with structured vetted trades and actually create a statistical edge. Now, the idea of an edge, assuming you do the work and you actually extract an edge, is to put the odds, if you will, in your favor that over a random sample size of interactions with the other participants, you extract dollars from the other side. It is the same business model that casinos use to extract dollars from the gamblers, even though they pay the gamblers. So we have to choose which side of the table we want to sit on. Do we want to sit with the gamblers, or do we want to actually sit on the house side of the table, even though we will pay the gamblers over time? The idea of gaming is if you have an edge over time, even though you pay the gamblers, you extract the dollars from the gamblers. It seems to work pretty good in casinos. They can give you the cocktails and the ticket to the buffet and maybe Adele. Maybe we can accomplish the same thing if we actually do the work. And that's what the Trader Lab is all about. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. This is based on structured trades, and you're all welcome to visit the Trader Lab community. And please give a like if you find this helpful. And thanks again for visiting the Trader Lab. Now, let's talk about today. By the way, this is what the structured trades look like. They're available. There's a link in the bottom of YouTube if you're inclined. If I have time, I'll get into this a little bit later, but we have a contest also available to everyone. And I will tell you about that. You can win a $1,000 cash prize plus a year-long subscription to Global Plus. Kind of cool. So let's take a look. Now, this is a micro composite volume profile. Is basically takes in swing high, swing low, and everything in between. Now, I go over this every day in the stream. I'm not going to get into detail with it except to tell you what happened yesterday. Now, day before yesterday, this was our activity. Market opened, went up, and then we had a very tight range, and we closed on the low. Now, let's look at the condition of the market. What does the market do? The market goes, well, let's try it this way. Up to go down. The market goes down to go up. The market goes up to go down. The market goes down to go up. The market goes up to go down. The market fools you, goes up, and then goes down. Now, here's the neat thing about this. We opened, went up, then we found too high, and I'm going to get into detail. So we came out the first hour's high, and it looked like we were going to do what we're doing today. C'est la guerre. This is life in the fast lane. What happens? Sell stops here, sell stops here. What does the market do? Market goes up to to go down. Why does it go down? It rotates on itself. And by the way, it does this in all time frames as you think of them are fractals. Why? Well, if the market's long, and there's no volume happening up here, like all of a sudden we've run out of buyers, and coincidentally just the day before, 2 days before NFP and the market's long, what might happen? Sell stops, hasta la vista, see you later. We'll send you a coupon from the edge. And then what? Close on the low. And then what? Watch. ETH. Now let's look a little closer. I'm going to show you yesterday's behavior. And this is the market profile. Now, we opened, I don't know if I can show you this here. Actually, I'm going to show you this someplace else. Basically, this is structured. Now, this is day before yesterday. Notice there's nothing going on here. It's compressed. And what I posted in Trader Lab is this market is not facilitating trade. It's just, and this little orange thing is called the value area. 70% of the volume for the day took place in here. It's compressed, and we closed on the low of the day. If you got sell stops here, because you're long, and you got sell stops under here, we can come here. That's the first stop on the Pony Express. And so what we did is we actually opened here, tested here, came all the way across the range, hit our target at 60.06, which was a target, and then we started doing this. We rotated. And this high volume is a retail price. These are auctions. Too high, too low, too high, too low, retail. And then we left it, and we fell out of it. That says, think of it in fractals. Too high, too low, the whole day. Well, here, intraday, too high, too low, rotation. Oh, it's on sale. I'm not paying that. Previous retail price, that was too high. Look at the confluence of behavior. This is the auction. And this is the high volume. Think of this like a store. Oh, we're shopping, and all of a sudden, for whatever reason, the participants go, nah, I'm not going to pay that. And they leave. Well, now the longs that are in this leg, where are their stops? They're going to be under here. Then what? Where's our next target? It's there. Now, if you want to learn about, and under these stops, okay? So we get these guys out under the bus. They get a coupon to the buffet, next place. Why did it stop here and make a new high? Same reason it stopped here. And do we know if it's going to do that? No. Here's what it looks like. Now, remember, this, let's look. The market opened here. This is the RTH open. Yes, remember, this is where we had no auction. In other words, bad auction, no volume. It's not facilitating trade. It's stuck. Close down there. Then what? Open higher. What happens here? See you later. Come down here to here. Now this sets up a long, and we did this, discuss this in Trader Lab, and we come out the top. Where's our target? This. Too high. Then we do this. I'm showing you the same thing in detail. And then we do the Acapulco cliff dive. And this is a structured trade in the Trader Lab called the IBF, IB failure. Some traders took it, others didn't. It's whatever your thing is. This is a long. Falling out of here creates the short. And then possibility to take out the stops under the low of the day. No clue as far as what happens after that. Stops are here. Support is there. Notice where we come. I'm just showing you how this works. And then we closed on the low. Looked like it was the end of the planet. Let's go a little further. Now this is where we closed yesterday. That was our target. And now we gap up. And notice where we are. Let's just take a little gander, if you will. Where are we? What was too high? Where did we fall out? What was too high in the fractal? There. And, down here. Now where are we? We open above the value area high, above that low volume node, and that's our first long. Here's what it looks like. This is as of the open. So this is our next target here, and looking over here, if this thing can get chugging along, which it may or may not, no clue, not important. Then there's stops here, and eventually, if this thing can get some gas in the tank, 60, 68. Not a recommendation. It doesn't have to go anywhere. Now, this orange line is the highest volume or retail price in this consolidation. The yellow lines are the individual RTH high volume. That's why it was a target yesterday. And then we did this, took out the stops. Thanks for playing. And this orange line is the retail price in this consolidation. So as long as and we can come back here, but what might we think if the trend is up and we take out the weak hands, the stops, and then we reject this auction and we're up here? Do you want to be long or do you want to be short? Well, you could trade either side. However, you might think that the trend, other than rotations and the usual things we do, if we can get over here, then we got that. If we don't do it, then we rotate or come back in here, can do anything. Part of the joy. Now, I have to remind you guys, we have a terrific contest going on at Bookmap. It's the Trading Desk Photo Competition. You got a camera and you have Bookmap, and this starts from June 2nd through June 30th, and it's open to everybody. By the way, a little hint, and I don't know if Bookmap's going to come after me with a pitchfork. I'm going to give you guys a hint if you don't have Bookmap, how you can participate. And you can win $1,000 cash prize plus 1 year of Global Plus with data. Second prize, $500 and a year of Global Plus and 3 months. Third prize with Global Plus and data. Take a photo. Now, how do you get sneak in? Don't tell anybody. If you go to bookmap.com, they have a free digital version of Bookmap. I know I'm going to get in trouble for this. You can download Bookmap. You don't have to be a Bookmap subscriber. And it operates, I believe it works on crypto, and you can kind of play with Bookmap. It's kind of a stripped down version. It doesn't have all the bells and whistles, but you can kind of get to see order flow and what you see here every day in the stream. So, and I would say, take a shot. Take a photo of that Bookmap and your trading station, your setup, and all you got to do is post it on either Instagram, X, or LinkedIn. Hashtag Bookmap Desk. Now, here's what some of these look like. Previous winners. That's something. And look at that. You can hear the streams in high fidelity. And this is a gallery of some trader setups. Pretty cool, huh? There's a nice, neat one, clean one. Okay. And July 1st is when you'll find out. So I think it's really cool. I have to mention it to you. And if you don't have Bookmap, you can still participate. And again, if I get in trouble, I'm okay with that because I want everybody to have an opportunity to win $1,000 and free Bookmap. So hope you're good with that. And thanks for your patience. Now, questions. And now let's get started with the real-time narration. Are you guys tracking? Please hit a like if you're in YouTube. All right. What did we do? Let's come back. Good question. What do we do? What are we doing? RTH open. This is the value area. This is where 70% of the volume took place yesterday in here, and this is the high outside range of it, okay? So that's considered the fair price is here, okay? Now, RTH open, so we're opening in range, and yesterday's high, I believe, is there, okay? So in range, outside of value. Let me tell you what that means. The market is out of balance. What do we anticipate? Overlapping, or what's called the normal variation day. Are we breaking out of the prior day's range? Well, yes. Now what? We're moving out of balance. What does it mean? If we're out of balance, the market is potentially rejecting former interpretation of value. What do we want to do? Initially, trade in the direction of the advancing side. Now, that does not take away that we can rotate, we can do whatever, right? Now, is everybody with me? Now, let me give you some statistics, and you have to vet everything for yourself. We're opening higher, that means above settlement, inside of yesterday's range. Now, grab your pen and paper, write this down. What is the probability of taking out the first hour's high or low? 98%. How about that? Taking out the ETH high or low? 97%. Taking out the previous high or low? 82%. Getting to the ETH overnight volume point of control? 81%. Taking out both the first hour's high and low, about a 30% probability. And the probability of taking out, now here's something that's a little weird, okay? We had what's called a neutral day yesterday. Neutral days tend to come in pairs. Just one of those things. But it's only about a 30% probability we take out the first hour's high and low. Here's where it gets weird in the sense or complex. The number one driving element in trading, at least from my experience, and it's an opinion, you have to vet everything you hear from anybody for yourself, is context. Context is up. So that means if we open, that we always can come out the bottom and pick off the weak players. And early this morning when we opened, I said, we have a weak low. Now let's start with the open. You got the statistics are available in the Trader Lab, as is those 60 PDFs I show in a library of webinars. There's no cost. Now, RTH open, this yellow line's developing volume point of control. Developing volume point of control is the shopping experience, the retail price. So let's look. What do I see here? I ask myself the same thing. And this here, that previous low volume node, I got to take you back so you see the method. I don't want to say to the madness, but some of us will say we are crazy. That's the previous low volume node. That price there was too high. This was where we rejected this auction. If I open above it, I might check here. And if it's still, now it's too low, instead of being too high, it becomes support. And then, you see? Whoop. I'm referring back and forth to this stuff so you can see how you put a plan together. Now, so we have, and I pointed out, I perceive this as a weak low. Because I know now here, I've got buyers, and I know my stops, they haven't been picked off. I call them stop picks. And if the market hasn't picked the stops off, I anticipate the potential to come back and pick them. So now, what do I know? Yesterday's value area high, too low. Previous low volume node, support. Weak opening swing low. IB low, first hour's low. Full session VWAP, RTH open. And I got to turn some levels off from IRT just a moment. It's showing some current levels, and we don't need those yet until we get into real time. 1 second to turn these off. If you have questions, by the way, please post them. I'll do my best. It's hard for me to look at the chats and do the narration for you so you can see market mechanics. The whole purpose of this stream is to help you guys understand there's method. And if you understand the business of trading, you can vet trade plans, and then you only interact when your vetted trade shows up. This is not a video game. This is a strategic endeavor. And what we attempt to do is align with the market. And of course, because the market's 100% random 100% of the time, we're not wired for this uncertainty. So most retail traders are looking for certainty in an environment where it doesn't exist. Remember, if the casinos could be certain about anything, they wouldn't deal you the cards where they have to pay you, right? Weak, break high, says get long, watch. VWAP, mid, developing volume, point of control. Now, right here, this is a previous retail price from day before yesterday that we hit. It's still important to me because we rejected it. So we came up right there and hit it. Right here. Now, some traders in Trader Lab will get long here. I did not. I would not get long here because I have a weak low. So I'm going, what's going on? And I have, this is my level that I just showed you. This and this is areas for my longs. Just telling you. Just saying, don't know. Now, VPOC migration. This is a structured trade in Trader Lab. Here's what the language of the market is. Remember, this is speaking a language. And I understand most of us at some point in our career, or maybe most of you probably still use indicators to track, price and some derivative. And whether it's an oscillator, an RSI, or the Holy Grail, whatever you got, that's fine. I don't use indicators. I speak language. I found that all my indicators were doing were attempting to interpret something, a price-based behavior or derivative in a time frame. Well, I don't use time and I don't use indicators. Instead, I want to read the language of the market. For me, volume is the key ingredient because a price up here that runs out of volume is not the same as a price with a lot of volume. It's the same as shopping. If a price is too high, wherever that is, and I run out of buyers, the market's going to rotate. If I come down here and I run out of sellers, and you see the delta, why did the market go up here? Now, this, I'm not prepared for a long here. Buyers are here. This is absorption. And why? Do you see the red delta? Why didn't it go down? See the icebergs? They're absorbing. No clue. Buyers break high. Off to the races, Lewis. This is aggressive, don't you think? Now up here, though, I run out of buyers. I get some selling icebergs. What happens? The sellers. What happens here? The buyers who are here are going, oh, really? Thank you. And they get some more. I come up here. What happens here? Buy stops. What happens to these guys? Absorbed, counter rotation. So it's a narrative. Sellers are here. They were absorbed. The sellers that were here are here. The buyers that are here are there, are there, are there. So this is order flow, but let's move on, okay? Now, targeting based on statistical probabilities. Yesterday's high. What was my probability of getting to yesterday's high or low? I know you write these down, 82%. Would you consider a long for this? 82% probability. Now, in the Trader Lab, there's two ways to get into this trade. Now, an aggressive trader would take this. Me, not for me. Why? I'm a patient trader. I have all day and many trades that I've vetted. So this is the first opportunity, structured trade, and this is the next one. This is called VPOC migration. It is context specific, not mechanical. Do you guys know that trading is not mechanical? Have you ever considered that maybe there's a little more to it than a line crossing or a piece of spaghetti sticking to the wall? Do you know every indicator has winning trades? Every one of them. So does that make them useful? Or does it make them part of the random noise? What do you think? I'm interested in what you think. I know what I think. And what I think is not based on my thoughts, it's based on my experience. This is the next target. And I got to take you back because the idea of this stream, so you guys understand, is to help you learn how markets work. 18. So where was my target? Yesterday, 06, important level. We rejected it. Too high. I'm not paying that. But if we open up here, then it's still important. And if I get through here, 18 is the next target. Now let's come back. Try to come back. Remember, this was the first area. Yesterday's high. And then we're going for this. Okay? This is all on the hip parade. This is trading the profiles and the volume. So long Trader Lab, a structured trade. So either there or there. If you're an aggressive trader, down against the low, the bottom there, doesn't matter. Why is this relevant? This was too high yesterday, right? What else do I know? If now this is no longer too high, you see the symmetry, I can get long here, I can get long here, and I'm going here, and I put my helmet on, and then it's trade management, and whatever happens, happens. Now, this is resistance, sweep, counter rotation, resistance. No clue. Break high, support right here. Why? It's resistance. You know the old saying, resistance becomes support. Buy sweeps. These are suggesting counter rotations. It's not mechanical. Buy sweep, suggesting counter rotation. No clue. Let's come out here. See if this doesn't look familiar. I'm just going to call this a high volume node. So what the market does in all fractals and time frames is it auctions. In other words, what's too high? And these are what consolidations are. They're like too high, too low. One moment. Okay, sorry. If this is too high, so what we're doing here is we sequentially, so buyers are here, buyers are there, sellers are there. Sellers are here, sellers are there, buyers are here. I'm just going to show you. When I get the delta and I get above it, that's absorption. There's the icebergs absorbing the sell stops. Stop an iceberg detector. Buyers are here, sellers, buyers are there, sellers are here. Sellers are there. I get the sweep. Now I can, do whatever. But I know my buyers are there. That guy was absorbed. You can see it here also. Buyers, 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 sellers are here. Buyers are here. Resistance, sweep, counter rotation, teeth chatter. Buyers are there. Sellers are here. Absorption, iceberg, 55 sell stops. They get a coupon to the buffet and their broker sends them a gift basket. Sellers, buyers, buyers, sellers. Above the absorption, buyers are here because they're being absorbed. These sellers are absorbed. Buyers get above the sellers. Support. Buyers, 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 sellers, support, absorption, sellers, absorption, buyers are here, watch, buyers, no clue, buy stops 283. Now this is interesting. Let me show you just a little tidbit. Now, I don't find these things necessarily actionable. I find them informational. How's that? Because anything can happen at any time. Buy stops, icebergs. One buy stop. So I have buyers here. And why aren't they going up? Because of these guys. Now, it's like Pac-Man. You know Pac-Man, right? Well, if the buyers are consuming the sellers, we keep going up. If we run out of buyers and we get our sellers, which are the passive side, the limit order book, this is what's sitting over here. I can see the icebergs. and I can see the liquidity. Now, what happens? Pac-Man is eating up the liquidity. Well, here we don't. So the buyers are here, the sellers are here. No different than here. The sellers are here, the buyers are here. The buyers are here. Sellers are there. Buyers get above those guys, fine. Sellers are here, they're absorbed. Buyers are here, sellers are here. It's a micro consolidation. Right here, it changes. Sellers now are below these buyers. Sellers are below the buyers. The last stand for the buyers at the moment in the short time frame is right there, and you get below them. Remember, this bubble here, these red delta are sellers, and the reason the market's going up when you see the sellers is because the buyers are here. And why is the market going down from here? Because the sellers are there. Consolidation, okay? When I break down from it, that's too high. And the high volume is right there. Let me show you. Now, it's not a short because the context is up. Now, when I say it's not a short, I'm only talking about me. I'm not talking about you. And what I do is not necessarily a good idea. It's just what fits my psychology. And for me, I'm good with it, you know. So in here is an auction. Too high, too low, retail, high volume. If I break away, it's too high. Let's look. VPOC migration. Now I got to extend this. Bookmap is going to fix this. It's actually not broken. It's just I want this. I want us to be able to just have this go across the chart, so I don't have to do that. Okay. What does it say? Language. No indicators. Buyers are here. Sellers took control. That's a trigger. Now we get VPOC migration. In the developing daily time frame, all the volume so far, this is the new retail price. I'm going to label it. Now this is going to be a little confusing. Think of this like Matryoshka dolls, Russian dolls. You know, they fit inside each other. So in the developing daily time frame, RTH, this yellow line at the moment is the retail price. In other words, that's where most of the volume is. In this fractal, now I'm going down in more micro structure. This is the same thing, but it's only here. This yellow line is the highest volume so far for the day is right there. So think of it like a retail price. It was here. And now my volume is starting to move away. This is the first, this is the first suggestion that there might be a counter rotation or more. I don't know. I come back here. Now for me, there's two possibilities here. If you're a counter trend trader, you can short this here. If you're just trading one side, which is kind of what I do, I just don't have the energy to be flipping like a flounder on a dock, and I want to stay aligned with what I perceive to be the higher time frame. Just my thing. I'm no longer a flipper. You know, I'm pretty much just get with the program and try to stay focused on the dominant side. And now if it changes, I change, no problem. But right here is for me a trade management opportunity. So this sets up a short trigger. Now, these could be short triggers. So you could see I'm not doing anything with these. I'm just trailing, you know, trailing. And when I get this, I now have a trigger, no different than that. Okay. But this, all this is saying, and this is the big kahuna, if you will, out. Okay. And then that's that, you know, now next trade. Where's my next trade? Well, I got to wait. VPOC migration. What does it say? Where do we come back? Look what happens. I'm not paying that. Break. Can't get back. VPOC migration. Extension. Where do we test? Is this price too high? Is it too high? Shopping. You ever go to a store and you go, hey, I'm not paying that. Get out of here. And in a short time frame, if you want to think of it that way, this is what's happening. I'm not paying that. I'm not paying that. I'm not paying that. If I break low here, maybe I'm not paying that. Where's my stops? Mid VWAP. Now, we have another trade in TraderLab. Let me explain it to you. Now, this will make you nutty because I'm in multiple time frames. If we think the trend is up, right? Maybe. Then we have a structured trade called VWAP or mid to VPOC. It's called mean reversion. So when the market is directional, you put your helmet on and you strap in. When we get rotational, if you think the market, the context is up, we're outside of range, we're outside of yesterday's high, we are not going to forget we have a weak low, remember? Then this is the next structured trade. And the idea of this trade, and here's the trigger. Let me show it to you. This is TraderLab methodology. And it's advanced, but it's not complicated. It's actually very simple. What is very hard for us as retail traders is our fear and gambling and not having a plan, just playing a video game. And that takes most traders out of the business. So what do we know? Location. And this is the retail price. So what I'm looking for, and I know this is too high, let's not forget that. So I have two locations. If I think the trend is up, I'm out of range, don't forget. Then I can come out here, take stops, 162, 58, 82, thanks for playing. Another hug from your broker. Buying icebergs. Buyers are here. No clue. Don't forget. Absorption here. Buyers are above the sellers. Buyers are here. No clue. Sellers are here. Break high. Trigger. Where's my edge? Here. That's my long entry. Let me take you back here. I just want to show you method. If I was a counter trend trader, where was my short entry? There. Or there, or there, or there. All these are possible. Just saying. Where's my long entry? There. To where? There. To where? There. To where? Out the top. To where? Scale. This is called mean reversion. Next target is this right here. Let's see what happened. I'm going to throw a line on here just so we can see it. Now, I don't know if you find this interesting or not. I found it very interesting when I was researching this stuff many years ago. And it was like, why is it doing this? Why was this a long to there? It's called mean reversion. And what's this? Too high. Now, the possibility is if I get through here, I go there and I go out the top. What do I know? By the way, I know I don't know. Here's what I know. Too low, retail, last place it was too high. This is resistance. If I can't get over it, it's head banging. So long, scale, got to clear this, and then it's trade management, number of contracts. Now watch. Pull back. Now this, once we come back here and we rejected this, I have nothing to do. It is possible we only come out under here and come back here. It's still mean reversion. I tend not to overstay my welcome. What happened? Let's see if you see something familiar. Variable high volume node. I'm going to put a little line here just so I can, again, keep it organized for you. Now, boy, trying to be close enough, right? You guys, if I'm off a tick, you're not going to shoot me. Variable high volume node. This is the auction. So what I'm doing is I'm watching the shoppers. And what did the shoppers say? Too high? This is too low. Retail? Too high. I'm out of here. What happens to the retail price? It's now here. If I get long here, where's my resistance now? It's there. Isn't it the same as the resistance that was there? Isn't it the same as the resistance that's here? right? Yesterday's high, new retail price, too high. Too high. You guys have any questions? I can keep doing this, but I think you're getting the idea, I hope. This is Trader Lab. This is advanced trading methodology. And the reason it's advanced is that it requires you to actually learn how the market works. The market does not work based on your indicator. By the way, I'm still sitting long, and my target for my next scale in the current market is around 13. Not going to show you that. And you're going, well, why did you do that? And it's, well, that's a great question. Too high. I'm not paying that. I will not pay that. I refuse to pay that. I am out of here. Now, let's go back to our opening swing low. Here, right? Where's the stops? Under the opening swing. The market gets long. What does the market do? In all fractals and time frames, the market goes up to go down. The market goes down to go up. And what's the context? Up. Opening swing low. I saw this and I was thinking, gee, and this is, what is that? Let's come back to something you've seen. What is this? I'm going to draw a little line in here for you. To me, this is so fascinating. When I'm starting to do this, it really kind of blew my mind because I started seeing behavior. And this is back in late 1980s. And I learned market profile from Peter Stottlemyre. You know, he came up with this. It's CBOT. And so, you know, you have all these things. It's very mechanical. And we all think mechanically when we're learning. So this was too low. My opening swing low is here. Now, right here, this is not a trade I can take because I'm looking for the stops to come out. This is a very risky trade. So this was nothing for me to do, though I'm still looking for longs. I'm not looking for anything other than a long. Look where I come. There. Who knew? And where do I come back? Here. And where else do I come? Watch. Resistance is there. Let's see what we do. I don't know. Resistance, resistance. Same. Then the Acapulco cliff dive in the stops. Now I'm going to stop for a moment, literally, and look up for your questions. How you guys doing? Are you guys tracking? How are we doing in YouTube? Please give a like. This is about the business of trading. This is about creating trade plans, understanding the environment you're operating in. It is not predictive. It is 100% random 100% of the time. The thing that needs not to be random is you. The way you can develop that is something called a trade plan, and you know where your trades will show up. And then if they align and you have a trigger and it's vetted and you have an edge, that's when you engage. Otherwise, you're a tourist. And most of us are, I'm going to say, those who don't sustain themselves in the business are playing a video game. They don't have a plan. In Trader Lab, you build a trade plan, and it's all done outside of trading hours. Then your goal is to bring your plan after you know where your edge lies. And that's it. That's as deep as this gets. There's nothing more. Now down here, clueless. This is the first hour's low. So all this is out the window. Now, the thing that is really complicated for developing traders is to not, I think is very hard, is not to be mechanical. Because we do have structured trades in Trader Lab to sell this. And if we sell this, we are counter trend. Now, in your fractal time frame, this might be a short. it's not for me. For me, I'm looking only for longs. So here I have two possibilities. With something, these are structured trades, but they have to be vetted. IB continuation trade, which is a short, looking for it to, get wherever it's going to go. And I'm inside yesterday's range, so all the longs are vulnerable. And this is a structured short, not a trade. And it's not a trade for me. It doesn't align with my plan, but it is a trade that some traders might take. Let's look at it. Resistance is now here, the variable high volume node. I have location, think real estate. I have an outside edge here, a low volume, it's called a low volume node. So it's one of these things. And this is the location. Let's see what it does. And again, not for me, but some traders would take this. Whoa. Well, now, where did I get long? I got to find this. Now, you guys may find this a little hard to take. Like I do trades and, they're not necessarily the structured trades. I'm long from 59.94. So why would I get long when everybody else is thinking? I don't know what everybody else is thinking. Because the trend is up. Because in the higher time frame, I am rejecting what's below, even though I understand that the market can, do whatever it's going to do. And I mean, it could do whatever. You get a tweet, you know how it is. Anything can happen. This is trading. What I know is this area, this is yesterday. And sure, we, blasted everybody. But I took the stops out under here and under here. Where's my sell stops? Well, it's under the lows currently of our day. But if we can't extend, all we did is take the week longs out, and then we can potentially come back up. And I don't know what it'll do. It's not my job. I can't predict anything. But what I can do is follow a plan and then just, as they say, let the chips fall where they may, literally. So I'm sitting long, I'm scaled, and I have targets sitting up here. I've got a 30% probability, which is not very high, that I take out this high. I've also hit key targets for today, and I might be done for the day. By that I mean the market may never go here because we're back inside a range. So we can still, this trade can fail just like any other trade. I'm going to turn some levels on, and now if you have questions, post them, please ask. I'll do my best. And also don't forget about the photo contest that's going on. And you guys can participate in that. There is no cost. When you ask HVN levels, what are you talking? Which HVN levels are you referring to there, NC? So my next scale is up here. Not a recommendation. I'm clueless. And the reason is I was anticipating a flush, which is not predictive. It's just market mechanics. Market goes up to go down. The market goes down to go up. The market goes up to go down. The market goes down to go up. The market goes up to go down. The market goes down, go up. In all fractals and time frames, if we removed everything from this and we just looked at these things, they look the same as everything else. It is all generic. The auction, the rotations, it's all the same. The market goes up to go down. The market goes down to go up. Now, this is the mean. Now, what's important on this trade is to get above. Now, we got the VWAP. We don't clear VWAP, then there could be trouble. So we'll see. And we have the mid, which I think is there. Maybe. So this thing needs to come back here. If it can't get back here, then this is still too high and we can fall out the bottom. So for me, I'm just trading the long side. It's not a recommendation. I'm inside of yesterday's range. I need to get outside. And if it doesn't do it, then that's that. And the trade will be over and I'll get a burger and maybe a slice of pizza. And then again, considering how much burgers and pizzas cost today, maybe not, but maybe just a side of fries. Are you guys with me? Would I be looking for an IBF? No. It's already happened. My long was down here. And let me show it to you. Now, the fact I take a trade doesn't mean anything. We all, whatever happens, happens to us, right? I want to isolate this for you. And this is not a structured trade. It's an order flow trade. When you're in the trader lab, first of all, you need to understand how the market works and, market mechanics. You also need to understand that we don't know what's going to happen. It's just like, yeah, whatever. Sellers, buyers, below the buyers, sellers in control. Buyers take a shot, sellers in control. I'm just pulling this just right here. I mean, this is also material, but that's besides the point. And I'm under this liquidity. Okay, let's just look at this. This is a sell trigger. Now, it's not, I'm only saying it's structure. It's not like, oh, let's get short. Unless that's part of your plan, not mine. Micro high volume structure is right there. That's like your little VPOC. Trigger, I'm rejecting the retail price in here. Too high, break. Where's the volume in here? Right there. I'm not paying that. Little VPOCs. Buyers are here. Sellers are here. Sellers are there. Break low. What's too high? A little volume right in there. Break low. Going to zero, Lewis. Liquidity. Sweep. No clue. Watch. This is how order flow and Bookmap can really help you. And you got to learn it. It's like any other high-end tool. There is no plug and play in trading, in my opinion. We've all been there. We've all done it. You guys have scoured the internet in the chat rooms from, and you've all bitten on the bait. The only one thing you need, just do this. And then you see examples of how it works, right? Just remember, if you had nothing on, and you didn't even have a chart, and you had a random buy sell button, and you didn't even know if it was going to hit buy or sell, just a random buy sell generator, you'd have winning trades. That's what I found with my indicators. They all had winning trades. So that was the grand illusion. But that's not necessarily edge. In fact, the only way you know is anchored inputs, just like the casinos. So here's my sellers going to zero. No clue. Sellers are here. Buyers are here. Buyers are here. Sellers are still in control. Higher. So I got buyers there. This guy was absorbed. Look where we came. Right where the buyers took control. Now I'm looking at this and I don't know, I'm clueless. Buyers are here. Sellers are here. Buyers are above the sellers. Buyers are above the sellers. Above the sellers. What time did I get into this thing? Let me see if I could just find this here. I just want you to get a sense because I want to show you the exact time. Yeah, it was right here. And the entry was 94. So I got long right here. When I see this and this against this, and I have my sellers, I already know my buyers are here. And I see this and I get above these guys. So there's absorption here. So this was my long. I figured it was okay. And then where am I trying to go? I got to come back here to get scaled because that's where I can anticipate sellers. Right there. And then it's either the trade fails or whatever it does, you know. Next location, and then trying to get above this. So there you are. That's it. We're current now. So do you have questions, guys? Now, I'm not saying this is good, or I have no opinion except this is just what I do. Outcome of any trade is random. I take stops. Everybody does. There's no magic. It's just what it is. It's like trying to grind sausage. It's you have your plan, you bring it to market, and it works or it doesn't work, and you take stops or you get scales and get scratched on the trade. That's it. If I get taken out of this trade, it's no big deal. I still have let's just say a nice profit built in, and I think given the price of ribeyes, it'll get me a nice ribeye, Caesar salad, and maybe a nice baked potato in Chicago downtown at a prime steakhouse. So I'm good with that. Of course, you know, you're always cheering for, come on, let's go. This is where I'm trying to go. But I did not get above VWAP. So we may just come back inside. No clue. So that's it. You guys have questions. I'll look up now. Thank you for your patience. Do I keep the HVNs on my chart forever? Do you mean the VPOCs, the previous naked VPOCs, NC? Is that what you're asking me about? How about a like? If you're getting something from this, remember the outcome of any trade is random. If this is not a trade calling room, I don't call trades. I don't do it. You don't want to follow what I do and take a stop. I take them. You know, you take them. Overhead and cost of production. And there is no plug and play in trading. I think you can't just go somewhere and imitate somebody else. Because if it did work, I think I would have done it a long time ago. What would you have paid to learn to trade and skip all this brain damage? Me? A lot. In fact, considering what it's cost me over the years, I would have saved a lot. When I started trading, there was no, we didn't even have SIM. You had to write it down. So it was, I'm just saying, this is a long time ago. But, you had to work really hard. And even then, if you have random inputs, you really didn't have anything. You just had random inputs give you random results, and they also give you winning trades, but no edge. So in spite of winning trades, and you can have a lot of winning trades, I had tons of winning trades, you'll still go out of business without an edge. Casinos would go out of business even though they're going to win from the gamblers. But over time, if they don't have an edge, they go out of business. So I suspect we should use a proven business model and not gamble. Leave it to the other traders that are in here gambling. We got tons of gamblers in here. Given the failure rate of retail traders, you need them, but you just don't want to be them. Write this down. Think like a retail trader. Don't act like one. Now remember where I am trying to go for my next scale. And what else? What we call the long ball out the top, not a recommendation. Who knows, right? Now, that's my trade. And there's parts of me, my fear, my doubt, because of randomness. There's the voice in my head saying, you ought to get out. You're going to get stopped out. You're going to leave that MFE on the table. Let's get it now and get out. What is that? What is that? Do you hear that in your head? Do you know what that is? That's Hyde. Dr. Jekyll and Mr. Hyde. Hyde's the lunatic. Hyde is risk adverse. It is your primal wiring to avoid risk. Whether you're giving back open profits or whether you're not going to take a trade or the hindsight, I told you you should have got out. 100% right in hindsight. So when that voice is in your head, that is not the voice that keeps you in this business. That's the voice that's trying to protect you, that has no clue that this is a business of seeking risk to get outsized rewards. Your primal wiring is designed for one thing only, to protect you from the saber-toothed tiger and the predators. So it interprets the market as a predator. Does that make sense? That's why you got to have a plan. Hold on 1 second. Let me just check something here, guys. Okay. I didn't know about that slow mode. I'm going to ask Dan or about slow mode so we can get maybe more timely responses. Dan, if you're in the chat, you comment about that. Pepe, you want to explain your last post? And how we doing in YouTube? Would I be looking for IBF? No. Oh, wait, IBF, yes. I'm sorry. But it's not a trade recommendation because for me, I'm already long and I'm risk neutral. This trade can still fail. We got to get above VWAP. So for me, I would not initiate a trade. I'm already in a trade. And to me, this was an outlier, you know, and it doesn't mean anything. Look here, we got 1,400 stops coming out and Icebergs took the other side and a buy trigger. So that's why this is reversion trading. So this thing has to get here. If it gets over here, we're going here. This is where my next scale is. And then maybe out the top or maybe not. And it's just one trade, you know. What happens, I think, what will happen, and in Trader Lab, the idea of Trader Lab, it's the business of trading. It really is about this as a business, not as a video game or fantasy island. And there's a lot of work to be done before you ever put a trade on. Now, we're all in a hurry. I know, right? Oh, let's play the video game. Let's have a lot of fun, right? Well, that's just not the way it is. It's just random. So we'll see what happens. We can very easily fall out, get under here, and then everybody else but the market has to come down now and get these lows out. So do I have a good chance of surviving this? Well, maybe, you know. One second. So let's see what it does. Now remember, not a trade recommendation. Buyers were here and there's stops under this swing. So we have to see if we can get stops out. The way I tend to look at these things is, what do retail traders tend to do? They're like lemmings. No offense, to us, they tend to do the same things. What do? They trail their stops under swings. Wherever they are, oh, I don't want to give it back. Look, I'm with you 100%. I don't want to give it back either. What have I found? If I stack my stop with everybody else, there is a pretty reasonable chance I'm going to get taken out. But here's what else I know. My buyers are here. My buyers are here. That's the absorption. If I come under here, are these buyers going to show up again and take the other side? There's my iceberg. So let's see what happens. Now, if I get under here, I can take these guys. And I've got my buyers here. This is my support. Now, I can still just, do a little inventory grab and come up or fall out. So I don't know what it's going to do. If you do, DM me, we'll talk. But other than that, just hang out. And none of these are trade recommendations. We just are going to read order flow here. So I've got my sellers. I got my stops. Now I want to see, I've got my icebergs and my sell stops. So you see the stops. My stops are under here and here. So what I'm looking for is once the stops come out, now either I'm going to get more selling, fine. And then, that's, as we say la guerre, or I'm going to find my buyers taking the other side of these stops coming out. So let's watch. So I'm under the swings. And this is where we had aggressive buying. So this is really an outside edge out here. Let's watch the behavior, guys. Where was support? Let me get this up to speed for you. Now, these are not trade recommendations. Everybody takes it on the chin and elsewhere. Watch. I'm just going to throw a little box around this. I want you to see structure. This is a useful way for you to identify behavior. And in Trader Lab, it's easy to get very myopic in this stuff, right? And by the way, this is not the Rock of Gibraltar. It's only where the buyers were here, the sellers were there. The buyers got above these sellers. The sellers took a shot, and the buyers that absorbed were here. That's what sets that up. I come back, buyers absorbed here, So these are swings, there's stops, and my support on this is really out here. So let's come back now. Let me move this. And don't forget our contest. Let's watch. So the support for this is here. If we keep going through here, then it's going to just fall out, and that's that. Trade will be over. I don't really think much more about it other than, you cheer. Come on, It's like a lottery ticket of sorts. But if you get risk neutral, it's a free ticket to ride. This is your obstacle. And this is your area of support. So now we got to see if these buyers come back in over here. We had them here. There was absorption. So right here, they got to step up or this trade will be over. Stops are under here. So this trade looks like it's not going to hold it. The volume is right about there. So that's kind of like the last gasp. So what I'm doing is I'm looking at microstructures of participant behavior. And I don't know what it's going to do. So, but what I know is market mechanics. The market goes up to go down, goes down to go up. The market goes up to go down. The market can go down to go up. The market can go up to go down. So what the market tends to do is it rotates, right? So if I understand rotations and fractals, I can anticipate behavior. Where's the stops? There, right? There, 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 there. And now where's my resistance? It's here. So support, resistance. If I can get through here, then, it's kind of sequential. We'll see what it does. Is this making some sense? TV7, hi. How do I know? Well, it's fractal. Yeah, Sniper, I didn't know that. I'm going to see if Stephen, are you in here, or Dan? Are you in Discord? Maybe we can get that straightened out for you guys. Sniper, thanks for bringing that up. So this trade we hit our resistance here. We're not getting anywhere. So this trade looks like it might have, as they say, trouble. $94 to 09. What I find in this is if I understand structure, I can anticipate reaction. That's what levels do for me. They don't tell me what the market's going to do. That part, haven't figured that out. And gave up on it because I can't predict anything. If the casinos can't predict what's going to happen, I certainly can't. So what I do is I look at this as gaming, structured trades that I've vetted that have an edge, and this trade's going to go south. But the thing that is most important for me is getting risk neutral. If I get risk neutral, then whatever happens doesn't impact me. So that's the minimum. So this trade's going south. So I have nothing now. Me. So let's take a look and see what else we got. So getting to yesterday's point of control is about a 68% probability. Getting to the ETH mid is 75% probability. These are possible. Where is... I got to find overnight volume point of control. Guys, where's overnight volume point of control? I think I lost it. I did. Could somebody post that in TraderLab? Oh, 59.69. Oh, wow. That's pretty far away. Yeah, I'm not, I don't know about that one. But these are viable targets here. Okay, there. All right. We can come back here, of course. And this is also a level from the ETH that we want to be aware of. So these are next areas to observe. My long trade is over. That's okay. And that's that. Thank you, guys. Oh, okay, Stephen, thanks. Yeah, guys, if you're in YouTube and you want a more immediate response to questions, use the link in the bottom of YouTube. You can visit the Bookmap Discord Trader Lab community. There's no cost for it. You won't be solicited or abused in any way. I think we all can abuse ourselves without any assistance. And then you can take advantage of all the additional education, stocks, options, crypto, of course, order flow, market maker behaviors, algorithmic behavior, and a lot of it. And it's all available. And other streamers besides me, where, you can get, whether it's stocks or whatever you're doing, swing trading, it's all available at no cost. And then when you participate in the Discord server, it's in real time, and I could see your questions right away. But YouTube is on a delay, which I didn't know. Now we know. So I have nothing to do. I'm just strictly right here. Just wait. There's a 30% probability we take out this high. And because it's Friday, we may not take anything out. It might be just, everybody's out for the long weekend. Time to head to the Hamptons, we used to say. Because I know all the guys, all my buddies on the floor, everybody on a Friday, we'd all leave early and start, well, let me just say, cocktails, steaks, Fridays, every Friday, we'd go out. The thing that was really strange about that was I'd come back, I'd be done after going out with you might say the trade, the guys on the trade desk with me. And then I'd be coming in around 8 o'clock at night, post, and or 9, and everybody else is going out for the evening. That ought to tell you something. TV7, my levels are all generated by the volume profile and market mechanics. They're all generated. I don't know which levels you're asking about, these or what's over here. These are coming off of Investor RT, which is my higher time frame profile tool, where I get these higher time frame perspectives. This is a developing profile in Bookmap. This is the chart volume profile. In other words, all this does is I'm seeing what's happening right here, right there. So I can see in micro that this is an auction. I can see a sweep. Now, I don't like trying to pick the low of anything. It's not my skill. It's just not my thing. I let somebody else do that. I figure they deserve to be rewarded. Me, not so much. Now, so far, we held the low of the day. That doesn't do anything for me. I'm out of my long. I now get in the Barca Lounger, and I wait a little while to see what we're going to do. Remember, this was my support, right? So I got under it. I have the sweep. This says counter rotation. This now can be resistance. So I have nothing to do. I just kind of hang out, whatever. So let's see what it does. So guys, if you're in YouTube and you want a more immediate response, or you want a better participation, come to Trader Lab chat. There's no cost for it, and there's a lot of resources in there. In fact, let me show you what the chat looks like. And don't forget about the contest that's going on right now. Let's see what's happening here. Well, get over here. See the resistance now? Support, whole concept becomes resistance. I have nothing to do. I'm a tourist. So there's a lot of activity in here, a lot of interaction. It's a terrific community. It's for serious traders. It's about the business of trading. It's not romper room. If you're interested in the business, that's what this is all about. Let's see if there's, and anyway, loads of charts and stuff and questions. And I narrate in here when I can. I'm also a full-time trader, so I do what I can. There's 60 PDFs of structured trades and a library of webinars. Ned, thanks for curating this for us. Watch the primer webinar. It's about an hour. I did it in 2021, December, I think it was. Don't remember anymore. Or sooner, possibly. And yeah, actually, I think it was done in 2020. Can't remember anymore. And it's got about 32,000 views. This is a high-level overview of this process. Meet the Trader Lab. This is advanced trader methodology. It is not a complicated. See, the thing about it is, what makes it advanced is it requires you to actually learn how the market works, as opposed to letting indicators translate the market, and then you think the business of trading is just indicator mixes and time frames. Well, it's not, in my opinion, and at least my experience. Stop gambling, start winning. Whether we know it or not, most of us are gamblers. And the reason we're gamblers is because we don't have a process with anchored inputs. We have random inputs. You know, it's kind of like a trading smorgasbord. Let's throw it all together on the plate, you know, and sometimes it's going to taste good, and sometimes you mix things together, it's not so good. It's random. Well, casinos don't do that, and they're very successful. So if we're going to emulate anything, it's certainly not randomness. The market is random. We need to be anchored. If we have anchored inputs, we can measure them. That's the big differentiator. Notice what's too high, you see. So this is a form of support and resistance. And then there's a lot of other things in here. There's a document section, the 60 structured trades, and they're not plug and play. In trading, to sustain this, create a business, I'm going to suggest, if it was that easy, we'd all do it. You would have done it. I would have done it. I tried it. I took indicators, every one I could get my hands on, reverse engineer them, build trading systems. I always get the same outcome. So I thought, well, maybe we don't do that anymore. Maybe support, resistance, break, resistance, and again, we're inside a value area. This is an advanced structured trade. I don't call trades, but it doesn't even matter to me. This is based on behavior. 70% of the volume took place in the value area yesterday. If I come back inside, then we can, and you have to vet this. This is it's a structured trade, but you have to, and where are we looking for? This. Not a recommendation. So if you took this trade, you'd be looking to get risk neutral. And I don't call trades, and I'm just telling you, and this might not even be a trade I would take, because I have to be mentally aligned with the market. And when I'm doing this, I can't trade. I've tried that. It didn't turn out so good. I can manage my trades, but I cannot initiate trades. My brain just does not multitask well. I understand. See, the language of the market is value. Let's go back to our context chart. Let's talk about today. We opened in range outside of value. So what does it mean? Did we break out a prior day's range? Yes. So we trade in the direction. That's what we've been doing. But what happens if we come back inside? It says, if we don't continue, then we're rejecting the interpretation of value. Hold on. Open in range. Whoops. Got this right. So now we're coming back in. Now you got to turn around and point the barge in the other direction. We are now rejecting the imbalance, and we're coming back to balance. Balance is inside of this range of value area, and the last place or retail price, think fractals, is here. So this is the target, and it's not a recommendation. This is the short, but, doesn't matter. But the point is, this might not be your trade. There's two key pieces to this. First of all, the long for me is okay to come here, mean reversion. Not getting over the VWAP is the challenge, right? Then managing the trade. There we had to get back over that resistance. Didn't do it. Once we break here, there's my resistance. It was my basis of my long, remember? Now it becomes a short, and that's the target. It's not a trade recommendation. That's based on statistics and not being able to hold this. See, the thing about the long over here that I discussed with you guys was we came under, we came out. And that was the basis of the speculation that we tested, rejected, and then revert here. Well, if we can't get over here to here at the moment, then that's too high. Then if I break, I can come back to the other side. And now I'm in the value area. That sets up this, or not. But the key to this is turning the boat around based on the participant behavior, not knowing what'll happen. It's just, and it works like this. If this is too low, then that. If not, and we don't know it's not until here, then what? Then this. If I break low and I get my counter rotation, there it is, and I'm holding support right here. There's my icebergs. There's my buyers. There's my liquidity. Everything says rotation. This is what we have to clear. Too high? Hasta la vista, Tom. Thanks for playing. You get a coupon to the buffet. And now this. What is it? Let's look at the language. This is too low. Here. If this is VWAP is too high, then test here. If this is too low, then back here. If this is too low, teeth start chattering, sweep, then back there. If I get through there, I go, it's sequential. If I can't get through here and I break, then hasta la vista. Then it's a potential short down to here. It's all the same in fractals. If this is too low and I can't get down here and I reverse around, then it's turn the barge around and we're back on this. Until that happens, this is the probabilities. I know it'll make you nutty, but that's alignment. And that's what a trade plan is. Not saying it's a good one. I'm just saying it's the only one I got, and it tends to work for me. Please give a like if you're visiting in YouTube, and don't forget our trading desk photo competition. All you need to do is show a photo of Bookmap in there. The photo must be at your trade location with your setup. It's got to be current, no AI, no cheating. Bookmap must be clearly visible on one of your screens, and all you got to do is post it on Instagram, X, or LinkedIn with the hashtag BookmapDesk. And you can win $1,000 plus a year of Bookmap Global Plus. Second prize, $500 Global Plus, 1 year, and third prize, 3 months. Here's what some of them look like. And now here's the secret. If you're not a current subscriber to Bookmap, use the link below, get the digital version, take a photo of that and send it in. And that's okay too. But get your hands on Bookmap, even the free digital version, take a photo, submit it, maybe you'll be a winner. Like to see your photo in the gallery. Also, please leave a like. Hope you got something from today. Appreciate you visiting the Trader Lab. This stream is available and the library of webinars and the Bookmap Trader Lab community to all of you. Use the link in the bottom of YouTube. There's no cost. And don't forget to give the like on the way out. Hope you got something out of the Trader Lab and visiting us today. Look forward to seeing you on Monday. Thanks again. Have a great weekend. And thanks for visiting the Trader Lab.